Hello and welcome back to Investing with Humility. My name is Bruno, and on this part, we'll be covering the most important section which everybody wants to know, which is investing. Now, before I proceed, I want you to be clear and to understand that we're not saying that investing in your 401k is the best investment option out there. However, it is an investment option and to help you grow financially, meaning as long as you're still in the working field where you're employed by your employer and the 401 is offered, it is a wise decision for you to make use of it. Because if you consider it, you're getting a match for as you know what your employer is investing to you. And you have an opportunity to grow that account over a certain period of time. Now, in case you're working for yourself, you may still find other investment opportunities which I won't discuss on this video. But again, this is a valuable thing for you to consider, since if you're in a working field for like 20 or 40 years, you do not want to waste all those matches which your employer would be giving you. Because guess what? If you do not take advantage of them, you won't get them. So you'll be losing money. You'll be losing free money essentially that your employer could be giving to you for a significant amount of time. All right, with that being said, let's dive in right to the video. So, investing in your 401k account. So, the variety of investments available on your 401k will depend on your plan provider and the choices your plan sponsor make. Getting to know the different types of investments will help you to create a portfolio that best suits your long-term financial needs. Among the most important and perhaps intimidating decisions you'll make when you're participating on your 401k plan is how to invest the money you will be contributing to your account. The investment portfolio you choose determines the rate at which the account has to grow and the income that you'll be able to withdraw after you retire. So those are the things that you should consider. Okay? All right. So, investment option. Most 401k plan provide at least 3 investment choices in your 401k plan, but some plans offer dozens. The average plan offers 8 to 12 alternatives, sometimes only mutual funds and sometimes a combination of mutual funds, guaranteed investment contact, GICs, or stable value fund. This is if you do not want to um, be aggressive with your investment, so you put it in a stable value fund. Again, this is the closest to the cash equivalent that you would get. It's a stable value fund. Company stocks and variable annuities. Some plans offer brokerage accounts, which means that you can select investments from the full range of stocks, bond, mutual funds, and other types of assets, rather than having to choose among plan alternatives. So your plan, you should contact your record keeping company which your plan uses to host your 401k plan, and you can ask them what you need to do to participate in the brokerage program. Okay, so every 401k plan lets you decide how to invest your contributions that you make. Some plans allow you to decide how to invest your employer's matching contributions, but others let your employer make that choice. That includes the right to provide the match in your company stock. If you have a limited number of choices, say 2 stocks, mutual funds, a bond fund, a stable value fund, and a money market fund, each is likely to put your money to work quite differently from the other. The more choices you have, the more difficult it is for you to make the choice. It will just depend on your risk tolerance. It's your responsibility to find out how the choice differ from each other and what Each of the choices that you make will impact your entire portfolio. When you're automatically enrolled in your 401k plan, your employer chooses a default investment for your contributions. The default investment will likely be a life cycle fund, a balanced fund, or a managed account, which the federal government has approved as acceptable choice. You have an option to stick to the default fund or to move your money into a different investment that you prefer. Alright, so at any point you can make changes to the investments that you have on your account. But by default, a fund will be assigned for you. Alright, types of 401k investments. The most common type of investment choices offered by a 401k is mutual fund. Mutual funds can offer built-in diversification and professional management and can be designed to meet a wide variety of investment objectives. Be mindful that investing in mutual funds involves certain risks, including the possibility that you may lose money. Your 401k plan may offer other types of investments. Some are more common, which include company stock. If you work for a public traded company, your 401k investment menu may include company stock or a fund that buys only your company stock. You may find that your employer encourages you to make this choice. For example, you may be able to buy a stock for less than the current market price or contribute a higher percentage of your salary if you're buying the stock. Your employer also may match a higher percentage of your contributions if it goes to the stock offering company that you're working with. It also provides a way for you to let your shares in the Alright, so that is the first option. The second option is individual stocks, bonds, and other securities. Some 401k plans allow you to buy a wide assortment of securities through brokerage accounts, sometimes called a brokerage window. You give buy and sell orders just as you do with your regular taxable account. In other cases of a 401k, because the entire account is tax deferred, if you sell a stock or bond you have purchased through a 401k brokerage account for more than what you paid for, you owe no capital tax on your profit, though you will owe income tax when you withdraw from your traditional tax deferred 401k account. The 401k brokerage account generally has an annual fee, depending on the brokerage firm the plan uses. There may be transaction costs and commissions on each trade you make through the account. You could pay a higher fee for mutual funds you buy through the account than on the funds that you take part on a plan. So do not be alarmed if your record-keeping company use a third party for their brokerage program. Example, let's say you're using Empower and they use TD Ameritrade for their brokerage. Or let's say, they have their brokerage in-house. Either way, sometimes, the company itself, your record-keeping company itself, they do not have the brokerage program. So they may use a third party. So be familiar with that. So the last option is variable annuities. Some 401k plans include variable annuities as investment options, which are a hybrid of insurance company products, combining a number of funds that resemble mutual funds with certain insurance protection. So if that is something that you're interested in and you have as an option, you may want to consider it. Okay. So lastly for this video is building your portfolio. Choosing the right combination of investment is essential to setting your 401k portfolio on the right track. But before you begin evaluating your choices, you want to consider several factors. Your time horizon. Generally, the farther you are from your retirement goals, the more time you have to compound earnings. If the value of your investment rises, and to recover from losses, if the value drops, the closer you are from your retirement, the more your portfolio you may want to shift into investments that are designed to preserve your capital and provide regular income. So this goes without saying, right? If you're closer to your retirement age, if you've worked for many years, you know, regardless of how your portfolio is performing, you want to put it in a um, less risky investments, because you do not want to risk it all, and you have, depending on how many types of investments you have made, um, you just want to protect your assets. You do not want to be really aggressive, unless you have, a lot of assets and you're set for life, then, you can decide what you want to do. All right, risk tolerance. Your risk tolerance will depend on the variety of factors that go beyond your comfort level. With taking risk or desire to achieve a particular return, you want to consider your goals and the time horizon of each goal. Other financial assets you own, current income from your job, the stability of your job, and any other sources of income. Okay, so please consider all those things when you're measuring the risks. Okay, lastly, other retirement assets. If you have other assets such as individual retirement account IRAs, taxable investments, pensions, or deferred annuities, you'll want to consider the bigger picture before deciding how to invest your 401k. If the bulk of those assets are allocated to more aggressive investments, for example, you might want to invest your 401k more conservatively to balance your risk. Alright, so I hope you have enjoyed this video. I hope this gave you an insight into investments. We'll dive right into more details. I'll explain to you, what a stock is, what are index funds, and what are ETFs, and all these things that may not be familiar to you right now, and I'll explain them into details, because the decision you make on how to invest your 401 or any of your retirement assets will determine significantly how much you'll be able to draw upon your retirement. So I hope you enjoy the content. Please subscribe, please follow, and thank you again. Have a blessed day.